We've arrived again at our quarter annual World Cup of Tesla information, and this installment certainly did not disappoint. This is Tesla's Q1 2018 earnings call recap, and this is Tesla Tidbits episode number 399 for May 3rd, 2018. We'll begin with the info found in the earnings letter before getting to the earnings call. Firstly, things we already know. Model 3 production reached 2,270 cars per week in April to make it 3 weeks straight over 2,000. The company held $2.7 billion in cash on hand at the end of the quarter, burning $700 million in cash since the end of 2017. On the upside, capital expenditures can be expected to be reduced from an originally estimated $3.4 billion for the year down to $3 billion. The company says it expects to be fully GAAP profitable for both Q3 and Q4. This is based on getting Model 3 to the stated 5,000 per week production, as well as getting Model 3 margins into the positive. Tesla admits that for Q1, they lost money on each car produced, the first time that this has been a true statement for any model in the time that I have followed the company. The goal is to be break even in Q2 and then be profitable the rest of the year. Tesla states that they've, quote, largely overcome, end quote, the production bottleneck at the Gigafactory producing the battery packs, and this is before installing the automation from Tesla Germany. Installing the lines, Tesla says, will increase efficiencies and drive down costs of production. Another statement reinforced by the earnings letter was that new options for Model 3 will not be seen until Tesla reaches the stated 5,000 per week production goal. So, dual motor folks, performance folks, standard battery folks, you're waiting some more. Recently, in the CBS This Morning interview, Elon made a startling statement that there were too many robots in the factory currently, and it's actually slowing down the production process. The letter seems to walk this back somewhat while copping to it at the same time. They spend a good 2 paragraphs talking about the importance of automation, then immediately explaining why it isn't currently being done. Quote, a step change in manufacturing doesn't come without its challenges, particularly early in the process, and we made a mistake by adding too much automation too quickly. In those select areas where we have had challenges ramping fully automated processes, such as portions of the battery module line, part of the material flow system, and 2 steps of general assembly, we have temporarily dialed back the automation and introduced certain semi-automated or manual processes while we work to eventually have full automation take back over. This flexibility has enabled us to continue to ramp Model 3 to new levels, end quote. Speaking of the Gigafactory and those precious battery packs being produced there, we get some interesting new info on them. Quote, cells used in Model 3 are the highest energy density cells used in any electric vehicle. We have achieved this by significantly reducing cobalt content per battery pack while increasing nickel content and still maintaining superior thermal stability. The cobalt content of our nickel-cobalt aluminum cathode chemistry is already lower than the next-generation cathodes that will be made by other cell producers with a nickel-manganese-cobalt ratio of 8 to 1 to 1. As a result, even with its battery, the gross weight of Model 3 is on par with its gasoline-powered counterparts, end quote. Lastly, the company expects to have Model 3 production shut down for about 10 days in the quarter to address bottlenecks and increase production. The number includes the shutdown that was already taken. Alright, now on to the main event. So, from the jump, it seemed to me like Elon was in a bit of a mood. This is the most flustered I think I've heard him on a call, and as you'll hear later, I wasn't wrong. Kicking off the call, Elon lets us know that the Gigafactory has now hit a sustained rate of 3,000 battery packs produced per week. And in a 1-hour burst, they actually hit the coveted 5,000 per week goal. But of course, this isn't sustained and doesn't legitimately extrapolate out. But as Elon mentions, it proves that the system can make it happen. Now things just need to be shored up to get the consistency. Next, the thing that this call will likely always be remembered for is the world being introduced to the Flufferbot. Elon recalls his tweets and appearance on CBS This Morning talking about the over-automation of some things and tells us the tale of Flufferbot, who was built to put fiberglass mats on top of the battery pack for sound dampening. Problem was, Flufferbot couldn't consistently apply the fluff. Eventually, they determined that the fluff wasn't even necessary. This after developing a full vision system to try to accomplish the task with this robot. So, money and time will be saved by both eliminating the part as well as the downtime on the line caused by Flufferbot failing to do its job. On the upside at the Gigafactory, it once took them 7 hours to produce a battery pack 3 weeks ago, and it now takes them less than 17 minutes. That is a massive improvement. It's no wonder that we had these production bottlenecks, because that is a long, long time to produce a single part. Elon considers Tesla ahead of schedule on pack and module production. He goes on to mention that it's general assembly at Fremont that is the current concern to get production over 3,000 cars per week. Elon notes a chart in the earnings release that shows that Model 3 is almost the best-selling mid-size premium sedan, bar none, not just in the EV segment. Model 3's competition in the category, as Tesla lays it out, are the Audi A4, BMW 3 Series, Mercedes C-Class, and Lexus IS. Elon goes back to spotlight something that he called out in the email to the company a little bit earlier this year, and that's the number of contractors that are in the company that may not necessarily be needed. He refers to it as scrubbing the barnacles, and that they have barnacles on barnacles. Quote, "There will be a lot of barnacle removal," end quote. That was all in Elon's opening remarks, so now we finally get to the questions. Some of the line of questioning has to do with the increased number of humans being used to get the job done. Elon made it quite clear that this was only a temporary solution, and it wouldn't be a long-term issue. Adam Jonas, though, brings up the elephant in the room as the third caller, noting that Elon has stated that Tesla does not need to raise any more money this year, but wondering if he would still want to do that despite seemingly no need. Elon replied to his question saying flatly, no, and that he specifically does not want to. Jonas also goes a little into the weeds, trying to make a link between Tesla and SpaceX that may be a little tenuous, mentioning the internet service that SpaceX is working to deploy, and how that might be a carrier for Tesla's car data, allowing them to eliminate cell partners. Elon said, quote, "It might be. There's lots of interesting things you could do," end quote, and, quote, "I haven't even thought about it, but probably there is," end quote. David Tamburino then asks what they've done to address production constraints with the initial shutdown that was taken, and what will be done with the future one. Elon takes us on a long walk, talking about how large the assembly operation is, but eventually arrives at needing to make improvements to general assembly and paint. We finally get to some of the more interesting questions from our standpoint, with the next question being what the timeline to launch Model Y is. Unfortunately, all we get is that significant capital spending for this project won't commence until next year. Elon gives us a tease that Model Y will be a manufacturing revolution because Tesla doesn't want to go through this pain again. However, we've kind of heard this story a little bit before coming into Model 3 production, and obviously, well, we're at where we're at now. So we'll see if they can truly keep to this. This now is where things got a bit interesting. It was clear that Elon was getting a bit annoyed by some of the questions, and a few questions later, Elon made it clear he wasn't going to suffer what he thought were foolish questions. When pressed about the drop in CapEx for this year, Elon cut off the questioner saying, quote, "Excuse me, next, boring bonehead questions are not cool, next," end quote. Somewhat comically, Cherie, the moderator, doesn't skip a beat at all introducing the next questioner. The next questioner asked what percentage of customers that had been invited to configure had actually taken the step to configure. This actually would have been interesting to know, as many folks may be waiting on yet-to-be-released features before configuring. However, Elon was apparently done with the line of questioning he was getting, and after a long, uncomfortable pause, declared, quote, "We're going to go to YouTube. Sorry, these questions are so dry, they're killing me," end quote. Fortunately, we did get some great questions from Galileo Russell from Hyperchange. He's the first person in some time to ask about anything related to the Tesla network, and get some details behind its eventual launch. Elon said that you need to have the pieces in place to make it happen, and firstly, that requires full autonomy. This drew an interesting statement, quote, "The only thing that would really be, might be needed, or maybe is probably needed, is a computer upgrade to have more processing power for the Vision neural net. But that's a plug-in replacement thing that can be done quite easily," end quote. So this completes the change from originally seemingly having full confidence that the existing equipment would get the job done, to hedging that bet, saying the computer could be upgraded if it was needed, to now veering towards saying that it is probably needed. What a long and winding road this has been on the full autonomy front. As to the timing of the service being offered, Elon said that the hardest bit was determining regulatory approval timing. He then says that despite the fact that autonomy should improve safety across the board, negative media attention and public pressure when deaths inevitably occur despite autonomy may delay this approval. He finishes saying that from a technical perspective, Tesla could be ready for full autonomy by the end of next year. This is another interesting nugget, as on the last earnings call, he pegged this at 3 to 6 months. Seems that goalpost got moved way back. Galileo keeps on trucking, asking about the Reuters report that Model Y would begin life being produced at Fremont, despite a seeming lack of room to do so. Elon discounts the Reuters report, saying that Model Y production would not be starting at the end of the next year, saying it was more likely 24 months from now, or Q2 2020. He reiterates that the production location for Model Y hasn't yet been decided, but he does say that it certainly won't be at Fremont. Next up, we get another great question about battery technology. Given the massive gains that Semi and the new Roadster seem to have obtained, he asks if that was the result of linear gains in existing technology, or if a breakthrough was made to enable the amazing range of the two new vehicles. J.B. Straubel then chimes in here, saying that it didn't require a breakthrough to get done, and that there's a fundamental misunderstanding of what Tesla's current technology is capable of. Elon then added that he felt the production Semi-unit would likely achieve a 600-mile range, up 100 from the 500 that was given in the unveil of the Semi. Galileo keeps on going, talking about the Porsche 350-kilowatt charger, which is more than double the capability of the current supercharger network. Elon quips that these are not boring questions and just lets him keep on going. He also poo-poos this concept, saying that it doesn't make much sense without having an enormous battery pack or having a huge C rate, which for those not in the know is the rate at which you can safely charge a battery without damaging it. But that this would mean that the energy density of the pack wouldn't be all that great if it had that huge C rate. Elon says that this would essentially torch the pack unless it met the former requirements. Elon said that the next version of the network would probably sit in the 200 to 250 kilowatt range. Cherie then begins to move on to the next person, but Elon stops her and tells Galileo to keep on going. He asks another great question on whether the supercharger network will ever be open to other manufacturers at a cost and as a source of revenue for Tesla, which is something that's been discussed in the past, and Elon touches on this. Elon says it's never been intended to be a walled garden, but basically nobody has approached Tesla about doing so. Galileo follows up asking why they'd ever open it when it's obviously a huge competitive advantage. Elon seems to not believe this to be a huge differentiator, which I wholeheartedly disagree with. Galileo had a few more questions following, again, pretty interesting ones, but I've got to edit this thing a bit somewhere and cut it off. When someone else finally actually got to talk, the question was on the Semi, asking about the number of reservations currently received and when first models might roll out. Elon actually wasn't sure on that number, but after a quick discussion, settled on about 2,000. He then deferred a bit, noting that the Model 3 was the main focus of the company. So it seems that Semi may be a significant time off. The follow-up was a good one too, asking about when a decision would be made regarding a new manufacturing facility. This kind of ties into earlier about the Model Y start. He said it would be this year, but no solid time frame was laid down. Elon also confirmed that the location of the elusive factory in China would be announced soon as well. The final question was relating to Autopilot and how the data might show how confident owners are in using it. Elon responded saying that the percentage of miles driven using Autopilot continues to grow, saying that it's around a third to half of all highway miles driven. However, Tesla has noticed that Autopilot has taken a hit in usage around the times that there have been Autopilot incidents reported in the news, which Elon said a couple times during the call makes him sad when things he feels aren't legitimate cause people to not use Autopilot, which he feels is a life-saving technology. Elon continued, saying that going forward, Autopilot safety statistics would be published quarterly, which is an awesome thing to do. Elon finishes noting that serious incidents involving Autopilot, quote, almost always, in fact maybe always the case, that it is an experienced user. The issue is more one of complacency, like they just get too used to it. That tends to be more of an issue. It's not a lack of understanding of what Autopilot can do, it's actually thinking they know more about Autopilot than they do, end quote. Lastly, responding to a caller asking that we be updated when production reaches the 3,000 and 4,000 marks per week, Elon gets into a tangent on short-term investing, producing the final gem of a quote in this call that was packed full of them. Quote, people get too focused on what's happening in the space of a few weeks or a few months. There's an old maxim of investing. You should not be focused on the short-term things. You should be focused on long-term things. We have no interest in satisfying the desires of day traders. I couldn't care less. Please sell our stock and don't buy it, end quote. After an interjection about volatility from the caller, Elon finished saying, quote, "I think that if people are concerned about volatility, they should definitely not buy our stock. I am not here to convince you to buy our stock. Do not buy it if volatility is scary," end quote. Another quote that I'm not sure I really agree with Elon on, but it certainly was entertaining for sure. Wow, so that's finally it. I definitely haven't laughed this much at a conference call, really ever. I hope you enjoyed this recap, and I'm glad you've stuck with me for what I'm near certain is the longest episode in this show's history. You can check out the full earnings report and conference call at ir.tesla.com. While you're doing that, please consider supporting the show financially through Patreon at patreon.com/Tesla Tidbits. Thanks very much to our super patrons out there supporting the show at the $10 plus level. They are John Waltower, Drew Schuyler, John Waller, Mark and Sarah Thomas, Ryan Scarborough, Lee Sweet, William Henry Crew III, Dorian Steve Guberman, Bernard Quindici, Joey Boots, Ralph and Cheryl Waterhouse, Adam Raymer Brown, Megawatt Photovoltaic Development, Todd Sullivan, Robert Healy, Mitch Long, and Zortec LED Canada. If you can't support with dollars, be sure to show your love with positive reviews and subscriptions on YouTube, iTunes, and other services across the internet. That's it for today's long episode. If you have feedback for me, the best way to be heard, as always, is to tweet at Tesla Tidbits and use the hashtag AskTeslaTidbits if you'd like your question to be considered for the show. And boy, do we have a lot to talk about, so feel free to fire those questions my way, and I would love to answer them. I'll see everyone back here again tomorrow. Until then, keep it charged and hit the road.